for any trade as to whether there's an opportunity to trade these ideas. And we talked about trading bottom edges, of course. I mean, if you look at the non-lag moving average on the S&P just before the news, you'll see actually we had quite a strong positive turn on this market here with the bottom edge there at 41.38. So that non-lag moving average turning at that stage, it gave you quite a strong idea about the bottom edge coming in at 37.5, 37s. And obviously the storyline at that stage was the best we've seen for a while. I mean, this was a little bit too late for us. This one here was pretty good, but it was still coming off the bottom edge. The bottom edge would have been a buy trade here, didn't quite play out. The top edge here didn't quite play out. You get the basic idea. It was all momentum at that stage. But this one's different. This one's actually in the right location at the right time. And obviously the takeaway from that trade with the non-lag was, as you can see, 41.38s. And obviously a beautiful spike on that all the way up to 41.78s for $2,000. So again, it's about knowing what rules you're going to use for any of these things, isn't it? It's not about having the tools, it's about how you're going to use the tools. It's about trying to figure out what the best way to utilize the tools are and having confidence that when you see a signal that it's worthy of your gamble, it's worthy of your money, it's worthy of your risk, it's worthy of whatever risk you're going to be willing to take on it. You know, when it sets up, it sets up. Anyway, the bond, 42.04s, traded a high price eventually of 43.24s. It was a reasonable trade. $1,500 is always a good bit of a Brucey bonus for anybody, and that was what, how long was that for? 1/4 till about 1:45, so about half an hour of total market exposure on that bit of business, guys. Half an hour. Nice, very nice. Interesting to see what the equity boys make of that when they come to the desks this afternoon, right?